Do you actually understand how your payslip works in Ireland? I'm often shocked at how many people cannot actually recalculate how much tax they should be paying on their payslip, because often some employers can get things wrong and you could be getting over or undercharged tax, which can cause issues down the line. Now, many of you as well may be just entering the workforce for the first time, or maybe you have just moved to Ireland recently and need to kind of start from the basics and understand exactly how your employment income is taxed. So in this video, I'm going to go through a basic example that will take you through all of the different taxes that are deducted from your pay each month or each week on your weekly or monthly pay. And recently the budget was released for 2025, so we know what all of the different tax rates and tax credits are going to be like for 2025, so we're going to use those rates for this calculation as well. Here, what we're looking at right now, this is what a typical payslip will look like in Ireland. The most important thing that you need to be able to understand is how do you work your way from your monthly gross pay, or your weekly or fortnightly, how often you get paid, down to your net pay, which is the amount that you actually receive into your bank. The difference will be between the two is just going to be the deductions, which is the taxes that are taken away from your pay. So we need to actually figure out how these taxes are calculated. There's 3 different taxes that will be deducted: your PAYE, your USC, and your pay related social insurance, which is your PRSI. There are 2 different types of PRSI. The first one is the employee PRSI. That's one that you pay personally as an employee. And there's also down here on the left hand side, you'll see employer PRSI. That is a tax that the employer pays on your behalf. It's a cost to them and not a cost to you. Usually on your payslip as well, there will be a breakdown for the taxes that you're paying for that specific period, whether it's this week or month or fortnight, for example. And it'll also have a cumulative amount of how much income you have earned from this employment in the year to date and how much tax you've paid in the year to date. So they'll have these 2 different boxes for this month and year to date, which is a cumulative amount for this year so far. So that was what the payslip actually looks like. Now let's go through a very simple example and we'll calculate the taxes all along the way so you understand how each of them works. For this example, we're going to assume we're looking at a single person and they earn €50,000 per year, and they decided that they want to contribute 5% of that €50,000 into their pension each year as well. And we're going to use the 2025 tax rates that were announced in the recent budget. As I said, there are 3 different taxes that you need to worry about. The first one is PAYE, the second one is USC, and the third one is employee PRSI. So the first one we're going to start off with here is calculating your PAYE. So when you calculate your PAYE, you get a tax relief if you have contributed towards your pension. So in this case, this person is going to contribute 5% of their gross pay towards their pension every month, and that will enable them to pay less PAYE. So the more you contribute towards your pension, the less PAYE you are going to pay. So the government really does encourage people to put money to the side into their pension, and they will give them tax relief for doing so. So this person here was putting 5% of their gross pay into their pension. That would mean basically that they're not going to pay any PAYE on this income that they're putting into their pension. What we'll do is we'll take the gross pay, we'll deduct off what pension contribution they have made. In this case, it's €2,500, and we'll be left with a net amount of €47,500. And this is what we'll use for our calculations then for the PAYE tax that is due. So essentially, any pension contributions that you make up to certain limits depending on your age are kind of out of the scope of PAYE tax. So now that we have calculated our gross pay net of the pension contributions that we have made, we can now apply the PAYE tax rates to it. So there's 2 different bands for PAYE. There's a lower rate of 20%, and for 2025 this is on everything up to €44,000. So that comes to €8,800 for this person, because they're earning say €47,500 for PAYE tax purposes. So we're going to pay €8,800 on the first €44,000, and then the balance, everything above that amount of €44,000, they're going to pay 40% tax. So the difference here between the 47,500 less 44,000 multiplied by 40% comes to €1,400. Now everybody is also entitled to certain amounts of PAYE tax credits. At the very minimum, you will be entitled to a single person tax credit, and if you are working, you'll be also entitled to an employee tax credit, both of which are worth €2,000 each. Now there are other tax credits that are available to claim, such as the rent tax credit, or maybe you have certain medical expenses you'll also get a tax credit for as well. These can also be applied here to this calculation, and you can claim them back at a later date. But for this example, let's just assume that this person is only entitled to the bare minimum when it comes to tax credits, which is the single person and the employee tax credit. So these two tax credits of totaling €4,000 then are deducted from the PAYE that we have to pay, the 8,800 plus the 1,400 less 4,000, and we are left with a total PAYE tax liability over the year of €6,200, which works out as €517 per month. This example we went through here was for a single person, and this is how the tax bands of the 20% and the 40% are applied for a single person. But if you are married, the tax bands can change. So essentially how it works is if you're married and there's only one income in the household, you can increase the 20% lower tax band from 44,000 up to €53,000 will be applied at the 20% rate, and then the balance above that will be 40%. If you're married and there's two incomes in the household, the first spouse can earn up to €53,000 at the lower rate of 20%, and the second spouse 35,000, and the balance above that again is 40%. So the benefit there, if you're married with two incomes, you can kind of transfer these amounts between each other if some of them are unused, so we can kind of maximize the amount that you can claim as a couple. So now we are done and dusted with the first tax, which is PAYE. The next one is the Universal Social Charge, and this tax is on your gross pay. The pension contributions do not come into play here. They don't factor into the calculation whatsoever. So it is a straightforward enough calculation. As you can see here, on the first €12,012, you just pay 0.5% tax on that. Then from 12,000 to 27,000 euro, you pay 2% tax on that segment of income. The amounts between 27,000 and 70,000 euro, this increases from 2% to 3%. And if you are earning above 70,000 euro, you're going to pay 4% on the amount above that level of 70,000 euro. So because the person in this example was earning 50,000 euro, only the first three bands here will come into play. So in total then they're paying the 60 euro plus the 307 euro plus 679 euro, which comes to 1,046 euro over the year. So the USC is quite straightforward to calculate. Similarly with the pay related social insurance, the PRSI, it's a straightforward enough one to calculate. For this person earning 50,000 euro, it's just a straight 4.1% on the total. Again, the pension contribution is not applied here. It's just straight on your gross pay. It's 4.1% for the start of 2025 up until the 1st of October, when it's going to increase from 4.1 to 4.2%. If you are paid under 352 euro per week, then you won't pay any employees kind of PRSI. So only people above 352 euro per week will pay PRSI here. There's also kind of a credit if you're between 352 to 424 euro per week. You can get a tax credit of 12 euro per week if you're between those two amounts. But for everybody else above those amounts, it's just a straight application of 4.1% multiplied by your gross pay here, which is 50,000 euro. Now, as I was saying at the start of the video, there are two different types of PRSI. There's the employee PRSI, which we have already just calculated, but there's also the employer PRSI. This is a tax on the employer and not you personally. They pay this on your behalf, and it doesn't come out of your gross pay. Your employer must essentially pay another 11.15% in tax calculated on your gross pay over to the revenue commissioners. You may see this on your payslip also, but you can completely ignore it when you're working out the difference between your gross pay and your net pay. There is a lower rate also of 8.9% for certain employees who are earning less than 496 euro per week. So that is it essentially. We've just worked through all of the different taxes for a single person earning 50,000 euro in Ireland. What they will essentially see on their payslip is the pension contribution will be deducted off, and the employer will pay that amount over to your pension provider on your behalf. So that will be taken out of your gross pay. Then you'll have the 3 different taxes that will also be deducted. So your PAYE, your USC and your PRSI, your employee PRSI, and that will leave you with your net pay. So if I take my €50,000 less the €2,500 less the €6,200 PAYE less the €1,046 USC and €2,050 employee PRSI, I'll be left with a net amount that I actually get into my pocket. That is the net pay that I will get into my pocket over the year, and that's the figure that I want to make sure is 100% correct. In terms of some other things that you may see appear on your payslip, you might have something like a taxable addition. This could be something like if your employer pays your, say, health insurance, for example, on your behalf, the value that you have received by them paying for your health insurance, let's say, for example, the health insurance costs €1,000, this will also be added to your payslip and you will be taxed on the value of €1,000. So say if your normal contract was for €50,000, essentially for tax purposes, your income will now be €51,000, and that will be included in your payslip and taxed as normal, like any other income. You may also see some non-taxable additions added in here as well. So for example, if you needed to go on some sort of, say, business trip that required you to claim some travel expenses, they typically would be non-taxable, so they would be added in here as a non-taxable addition. And then you would ignore those then when you're calculating the different taxes such as your PAYE, USC and PRSI. Some other examples of non-taxable additions would be the likes of the bike to work scheme, or maybe, for example, as part of your job you are required to be part of a professional body and your employer is paying your annual subscription or membership fee for that professional body. That would be an example of another non-taxable addition. So I hope that all made sense. That was a quick kind of run through of how the different taxes work. If you have any kind of questions that you want to run through, let me know down in the comment section, and I hope you found this video useful.